So what's the big problem with wealth creation? How do people like us, who didn't inherit a boatload of money, who are investing and building wealth from our own blood, sweat and tears, how do we invest in a way that gives us remarkable results and become financially free before retirement age? I don't know about you, but I am sick of hearing from wealth gurus and experts who don't walk their own talk and prescribe strategies that are a one-size-fits-all approach. For self-made people like you and me, I'm here to tell you that you don't need to be superhuman or already wealthy to reach financial freedom earlier than 65. This is the Alternative Investing Podcast. Hey guys, welcome back to the podcast. I'm really excited about the episode today where I really want to unpack exactly how easy it is to get to a six-figure passive income without needing a crazy amount of capital and without taking on unnecessary risks. So this is an episode that I think a few of you are really crying out for because, to some degree, what I'm trying to teach as part of this podcast is just the fundamentals of wealth building. I think too often people are all about show me the deals. But the truth of the matter is if you don't get the fundamentals of wealth building right, then unfortunately it's like the easiest metaphor is like, filling a leaky bucket. The concepts of stewardship, choosing investments effectively, your mindset and relationship to money, the networks you cultivate, and of course, the wisdom and knowledge that you build are all pillars and massive contributors to your success as an investor. And I've covered a lot of those in great detail in other episodes. What I want to do today is I want to be really practical. I want to get into the nuts and bolts of what is required to build a six-figure income from alternative real estate. So we all know that traditional property is fabulous and probably, incomparable when it comes to just building a stable foundation of capital. And for those of you who haven't heard my three-part game metaphor, the part one of the game of wealth building has to be around building capital. Once you've established a baseline level of capital, and when I take you through the next few little bits on how to get to six figures, you'll understand what I mean by baseline capital. But once you get to a baseline capital, you don't have to slog it out for 25 to 40 years waiting for that capital to grow to the point where it spits out a pissy little income stream for you to live off. And when I say that, what I mean is that, unfortunately, the way that a lot of property markets across the globe have evolved, particularly in first world nations, is that as people have become wealthier, the demand for real estate investing has gone up. And, in general, inflation and other inflationary pressures have pushed up the price of real estate relative to earnings. In many countries, the income stream that you can expect to earn from property is relatively poor. I guess what I want to kind of talk about today is how instead of waiting for the income stream from your property portfolio to give you enough life-altering income that you can step off, or feeling like you have no choice but to sell down your assets and eat the cow. What I want to do is give you this other idea which involves how to use the asset class of alternative investments to build up to a six-figure passive income. And I'm going to take you through some real stories of clients who've done this and managed to hit their financial freedom goals within anywhere from 2 to 5 years without really taking much risk or exposing much of their portfolio. So I think the best starting point is to give you a quick reminder of what alternative investments are. So alternative investments are a class of strategies that are backed by real property, in my own case, and that allow you to have the highest level of control over an asset or a deal, but without having to get into the weeds and worry about day-to-day management. It includes things like property syndications, joint ventures, lending deals where you become the bank. Obviously, there's direct property and then private, all sorts of private funds and syndications. So the point of the matter is what's exciting about alternative real estate is instead of having to take out a deal in its entirety, deal can start anywhere from kind of 10 to 20,000 per deal up to about 100, 150,000 per deal. You don't need the banks. Usually the deal maker is the one that secures finance. So all you have to do as the investor is come in, do your due diligence, be confident about the strategy, the deal maker, the way that assets are selected, your exposure, what the downside protection is. And then you put your money in and you just collect the income. And the reason that these strategies are just so awesome for cash flow is because often these deal makers are specialists in what I call very inefficient markets, meaning there's not a lot of people looking for deals. And certainly the average investor and the masses are not looking for deals in this particular space. So what that does is for the smart deal operator, it allows them to find opportunities that produce really great income and work with astute, generally experienced investors who are interested in building cash flow. If I'm a responsible mentor here, I would say to you, as much as people get excited about the sorts of returns, and double-digit returns is pretty common, depending on how ambitious you are, you can get a net return after expenses of anywhere from 8 to 18% on average. And what I would say to you is that, if you're in phase one, which is building your capital, just try not to get too distracted by alternative, learn about them and understand them, but know that you need some capital to play with in order to get a meaningful result. I think that's enough of an overview, but let me actually describe to you how I see this process of building a six-figure income with alternative investments in a relatively short space of time. So there's a tool on my website, and you can go and grab this in cosiwealth.com, and it's called the Freedom Mapper. And what's awesome about this Freedom Mapper, it is a super basic calculator, and it just helps you understand if you had a starting balance of X amount of capital and you tried to get a return of Y percentage per annum net, meaning, after expenses, and you contributed a certain amount of capital every year, where would you be in 5 years' time? And I think this is a really great starting point because, if you imagine that the amount of money that you need per deal is, let's even say $50,000 on average, then if you have a starting balance of whether it's 200,000 or 500,000, just assume that you could carve that up into a number of different buckets. Let's imagine you carve up your 500,000 into, somewhere between 6 to 10 buckets. 200,000 you carve up and you put into 3 to 4 buckets. So you get the idea. But when you look at the Freedom Mapper, all you've got to do is come up with those three numbers, and it will just show you that if you allow, for example, that income that you earn each year to just go back or, be reinvested, where am I going to be in terms of a passive income stream by year 5? Now, the reason that I created this calculator is it's really hard to grasp that a smaller amount of capital can actually get you to a fairly significant return over 5 years. So I want to take you through some real examples. So I have a client who has a starting capital balance of 200,000. They already have a fairly decent property portfolio, and they've recognized that the cash flow coming from that property portfolio, which I think is in the vicinity of about $15,000 per annum, is just nowhere near what they need to live comfortably. So they're looking at alternative investments as a way of scaling that income, potentially, 5 to 10xing it, and they need it to be game over within 5 years. Now, this particular client runs a engineering business, and they are, I would say, relatively young. They're looking to have a family of 3 to 4 kids over the next, 5 to 10 years. And they just want that freedom to just be present with the children in terms of, especially in their younger years. So it's not that they've got only 200,000 to invest, but they just want to start modestly and then build up from there. So they've decided that they want to have a starting balance of 200,000 and that they want to, aim for an average net return of about 12%, which is very doable in the markets that we operate in, and that they're going to add I'm going to say 110,000 per annum. They've started with a starting balance of 200,000. They're looking for an average annual return of 12. Some might be little above, little below. They're going to put in 110,000 per annum. If I allow that to compound, by the end of year 5, that is throwing off $105,000 in cash flow. So in 5 years, they are going to achieve more than they have in the last 15. Now, this particular couple, their scenario is they've run the numbers and we've forecast how long is it going to take them if they take no more action, and they've already hit their borrowing limit, I think, in terms of how many properties they can buy for now. Maybe over the next 5 to 10 years, they can throw in maybe another 1 or 2 properties, but they're pretty, well leveraged, and the banks are saying no more based on the income they have. If they were to kind of just sit on the property portfolio they have, they're about 28 years away from reaching the financial freedom that they need. You can see why after 5 years, with really a very small fraction of their portfolio, I'm going to say this will probably constitute maybe 10%, 10 to 15% by the end. They're actually going to hit their goals. Now let's try something different. Let's try, if you started with, say, a starting balance of 500,000, let's say a little bit more aggressive, and you're going to go for a 13% net return on average, and you're going to only add $50,000 per annum. Again, you can see that by allowing your returns to compound each year. And obviously this assumes that you don't need that money to live off. By the end of year 5, you've hit 124,000. So guys, there's nothing particularly complex about this calculator, but you can start to see that, the pursuit of alternative investments isn't about saying, I'm going to sell everything I own and stick it in here. In fact, if you're working with me, I would probably stop you from doing that. It's about working out what is the minimum viable amount of capital that I need to come up with in order to reach my goals. Now, if you've got a shorter timeline, you just think about, well, how do I alter those numbers? But if you recall the 3 parts to the game, part 1 is build the capital. Part 2 is by deploying your money into a few alternative investments, you can massively change the trajectory of your passive income. And then part 3 of the game is really about, say, for example, in this case, in year 5, is talking about, well, okay, I've got, a balance of about 1.2 million invested in this case, and it's throwing off a cash flow of about 124,000. So what do I want? Like, how do I structure now to choose investments where basically they are set and forget? The idea is for business owners, for entrepreneurs, to start thinking about, how do I divert, my precious dividends out of, the income stream that I have, and instead of, trying to live and expand my lifestyle, is mindfully allocate money over the next 3 to 5 years, so that in 5 years I have the choice as to whether or not I keep working or get off, the rat race Ferris wheel. So look, guys, I hope you find this useful. I think the point that I'm trying to make is that these are not crazy scenarios. There's no crazy risk taking going on here. What we're doing, and I haven't even covered how in my world the alternative investments are often lower risk than even some of the traditional assets that people believe in and know and love. But, you don't have to be a rocket scientist. You have to be someone who is open to a new way of thinking. But freedom mapping and the idea of building a passive income over a relatively short space of time is totally achievable. And if you want to be wealthy instead of just looking rich, this has to be an income stream or a strategy to build passive income that you must consider. So guys, my call to action to you, if you haven't already gleaned it, is go to the website, get a hold of the Freedom Mapper, have a play with it. And certainly if you're interested in understanding how alternative investments could fit into your world, how as a business owner you could step off or have the freedom to choose whether or not you work over the next 2, 3, 4, 5 years, please get in touch. I'd love to hear from you. I'm super passionate about this stuff. It is really changing the lives of so many people, and I'm really excited about the contribution that we're making in this program to the lives of potentially hundreds of people. Till next time, take care. You've been listening to the Alternative Investing Podcast. If you're feeling frustrated that despite doing everything right in the property investing playbook and you're no closer to financial freedom, then head on over to incosiwealth.com to learn more about how you can use alternative investments to catapult your investing income and blend strategies to shave decades off your timeline to financial freedom. See you on the next episode.